Hello, welcome back to Muffet Investments. AMD is reporting their second quarter earnings after market close. Advanced Micro Devices, AMD, is a global semiconductor company designing and manufacturing high-performance computing, graphics, and embedded processors. Its products serve a vast array of markets, including gaming, data centers, cloud computing, and embedded systems. AMD's core strength lies in its ability to deliver high-performance, energy-efficient solutions that compete directly with industry giants like Intel and NVIDIA. Today we present an investment strategy using Leap's options to amplify our gains and reduce risk at the same time. Please note that the following idea is just educational and informational purposes only. We are not financial advisors, and this is not financial advice. Please consult a financial advisor if you are not familiar with options or investing. AMD is currently trading at $135.33. Its market cap is $218 billion. The revenues has grown from $9 billion to $22 billion and net income is $1 billion. The earnings per shares has fallen though to 13 cents. They have total assets of $67 billion and debt of $3 billion. AMD is poised for significant growth in the near future. Several key factors underpin this bullish outlook. AI and data center boom. The rapid advancement of artificial intelligence, AI, is driving unprecedented demand for high-performance computing, HPC, capabilities. AMD's data center solutions, including EPYC CPUs and Instinct GPUs, are well positioned to capitalize on this trend. As AI applications become more pervasive, the need for powerful, energy-efficient processors will only increase. Gaming market expansion. The gaming industry continues to expand, with an increasing number of gamers adopting high-end systems. AMD's Ryzen processors and Radeon graphics cards offer exceptional performance and value, making them popular choices among gamers. It's essential to approach any investment with caution. The semiconductor industry is cyclical, and economic downturns can impact demand for AMD's products. Additionally, intense competition from established rivals like Intel and NVIDIA, as well as emerging players, could pose challenges. AMD's PE ratio is very high, so you need to be very convinced about the prospects for AMD stock before employing this strategy. If we look at the monthly chart of AMD, the price is retracing to the previous accumulation/consolidation zone at around $120. Price might find support here. The market is still in an uptrend, making higher highs and higher lows. The price is touching the 20 EMA. It is important to note that nobody can say for sure how low price can go and when it will find support. This is why employing a strategy using options would be a good idea here. We are at a zone where price might potentially rally, and so the probability of winning is slightly higher. But when we use options, it increases the probability even more and reduces overall risk. Here are using Leap's options. They have expiry dates greater than 1 year. The advantages of Leaps is their time value premium, which degrades over time. This works in favor of the options seller. Also, at times of increased volatility, such as when the stock is falling and there is an earnings report due, the time value premium is increased. This means we get more premium by selling the options. Here are the options chains for AMD for January 2026 expiry. The put options chain and the call options chain. Here is how we do the strategy. Buy 100 shares of AMD at $135.33. Sell January 2026 $180 call for $20. Sell January 2026 $100 put for $10. When we sell the January 2026 $180 call, we have an obligation to sell 100 shares of AMD at $180. For this we get paid a premium of $20. When we sell the January 2026 $100 put, we have an obligation to buy 100 shares of AMD at $100. This is 35% below current market price. For this we get paid a premium of $10. In January 2026, there can be 3 scenarios. AMD stock above $180. Here the stock might be called away. But because we have collected $20 for selling the call, we have really sold the stock at $200. The sold $100 put will expire worthless. That would give us a 60% gain in 18 months. It would be a great return on investment. This strategy would be better than buying a stocks alone as long as AMD stock is below $210. AMD stock between $180 and $100. Here both the sold options would expire worthless, and the return on investment would be based on the price of AMD stock. If AMD stock is above $135, then the options investor would have gained whatever price the AMD stock is trading plus the $30 in sold premium. If AMD stock is between $135 to $100, then again both the options will expire worthless. But the option investor only loses out if AMD stock is below $105. This is because of the $30 he collected in premiums. AMD stock is below $100. Here the sold call expires worthless, but the stock might be assigned as the sold put has some value in it. So you are obliged to buy a further 100 shares of AMD at $100. But if AMD were to be trading at $80, then you would still buy the stock at $100, resulting in a $20 loss. Here the options investor loses big. But action can be taken to roll the options lower as long as the investor is convinced about the growth story for AMD stock. So it is very important that you do due diligence on AMD stock before employing this strategy. We hope you liked this video. Please comment on what you think about the video and subscribe if you found this helpful.